Today we're going to talk about Nebius. So those that have been following the channel for a long time know that last year we highly recommended this stock, and those who jumped aboard 10x their money. If you want to stay up to date about these kind of stocks, smash that like button and subscribe. Now let's talk about Nebius. So last week Nebius reported their earnings and they were again stellar. I will give you my top 5 takeaways from these earnings. So the revenue jumped an itsy peetsy little bit year over year. It's now 399 million, which is a small year over year increase of 684%. Even if you look at the previous quarter, Q4 2025, it's a 75% increase. So those are rocket ship numbers. Nebius is really firing on all cylinders and doing everything right. They jumped into the AI hype train right at the right moment and are now riding the wave like a maniac. Of course, the biggest reason of the revenue growth is because of AI. The core AI cloud grew 840% year over year, which is an even bigger number, and we love big numbers. One of the big takeaways from the earnings was that management revealed a massive 27 billion 5-year partnership with Meta, consisting of a 12 billion fixed compute guarantee and a 15 billion flexible option. Now, if we leave Meta aside, the overall commercial pipeline grew 3.5 times quarter over quarter. So again, those are incredible numbers. They really are executing everything perfect. I will repeat it, I will say it again. Nebius is really doing everything right. Now the next thing they said, to meet their pre-committed demand, Nebius is raising its full year Capex guidance to 20 or 25 billion dollars, up from 16 to 20. So they are really building out their cloud AI infrastructure because of the demand is so big. They have to spend more and more money, which is of course great to see. They also secured enough power for a 1.2 gigawatt AI factory in Pennsylvania. So they are really aggressively building out their company. What was also a surprise was the EBITDA turned positive, very positive, with 130 million, which is about 33% compared to a loss of 54 million a quarter ago. But of course, if you take in infrastructure spending and all that, they still made a loss of about 100 million, which is fine. They are building out their company. They are getting big contracts. They are turning up their revenue stream. They are really now in the building stage of the company, and already they are growing so fast. They're expecting to have a full year revenue of about $3.5 billion with a nice EBITDA of 40%. But of course, they're expecting to have a loss at the end of the line because of the big infrastructure investments. But you can really see this company growing into a very profitable, very high growth company. The current market cap is 55 billion, which maybe is a bit high considering the current revenue. However, with the growth they are expecting to have and currently having, and with the way the management is executing, I'm seeing them growing much stronger. I wouldn't be surprised if in another 5 years they 10x again, especially if the AI demand keeps as strong or becomes even stronger as it is today. So to me, Nebius is still a buy even after the 10x run they had over the last year. I would highly recommend it. Now I'm curious, have you bought Nebius in the past and I have had a nice run up, or are you planning on buying Nebius in the future? Or why aren't you buying Nebius? I'm very curious. Let me know in the comments down below, and see you in the next one. Bye.